Remember, measuring is the key to all of this. You can't optimize what you cannot measure. And we have been taught not to measure. So we have an example here that we're putting on the screen right now. Folks, here's what we're talking about. This was a brand new mortgage at 4% for these folks. And what we're talking about is with their mortgage and their loans, they owe a total of $204,000. And in the first 60 months on this loan, in the first 5 years, this is what it would look like for them. It was a comfortable payment. They liked everything about this, and they were going to go ahead and they jumped into this loan, but they heard about what we do and they asked, what should we be doing instead? So we showed them after 5 years, you would pay this loan down by $18,675.20 out of your payment. But look how much money goes to interest, $37,325.80. That is a lot of money to pay out for $18,000 worth of equity. So if you're taking a look at building equity here, folks, by paying down your mortgage, and it costs $37,000 in interest to get $18,000 in equity, do we really have equity at this point? If you got to pay $37,000 to get it, man, we have to start paying attention to our interest consumption, just like anything else. So here's the total amount of what they would pay out in 5 years, $56,000 just to get $18,600 in potential equity. Why? Because at 4% interest, the bank wants 71% of what you borrowed in terms of interest. And here's what I mean. If your loan was $100,000 for 30 years at 4%, here's how much interest the bank would want on a $100,000 loan. $71,870 interest on a $100,000 loan at 4%. Folks, does that sound like 4% to you? Where we have to pay $71,870 on a $100,000 loan? My goodness. And we got to pay $71,000 interest on that? Kenyatta, you live in Chicago. Jared, listen, you're all over the place. I've seen, even in my little bit of experience, I've seen cars that cost more than $100,000. Can you imagine getting a car loan for 30 years that's going to cost you $71,000 to buy a car that costs you $100,000? Can you even wrap your mind around that idea?
That does not make sense.
Then why is it so easy for us to believe it takes 30 years to pay off a $100,000 house or a $200,000 house? We accept that without question. But we would not accept that for our Bentley or our Maserati or any other type of expensive car. You know, we wouldn't accept it. So what's going on here? What do we need to know instead? Here's where we're going with this. All right. If we treat our car, because we have a way of measuring, we have a tool that measures now. If we have a tool that measures how all of this works, we can make decisions like this and live a great lifestyle while we're doing it. So instead of paying off the $204,000 over 30 years, and paying out $143,018 in interest, how about just paying out $41,000? How about saving over $108,000? How about doing that instead and paying off the $204,000 in 7.5 years? Take the interest savings that we didn't have to pay the bank, and over the next 22 years, instead of giving the bank all of this money over 30 years, let's take some of that money and put it away and build wealth with it, over $815,000, instead of trying to pay off a mortgage in 30 years and then just be done. How about at the same time, other people are paying off their mortgages. You have a mortgage that's been paid off years early, and now you've turned that money that was going to go to the bank into over $800,000. And do you know what's surprising about this number here? This $815,000, that's at 1% interest return on their money. where we're averaging 6, 7, 8%. This could easily be $1 million for this family, working a 9-to-5 job, having a paid off house, and a nest egg of another $1 million in addition to what they're already saving in their savings plans at work. OMG. That's what we're talking about, folks.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.